Modes of paying import. There are different kinds of modes of paying for an import transactions, and in this video, we are going to discuss all of those. First, let us study the direct parties in trade transactions. So who are involved in a trade transaction? The parties that are involved in a trade transactions are the buyer and the seller, the buyer's bank and the seller's bank. The buyer and the seller had the goods consigned directly through a sale contract. Then they are going to submit a draft of the bill of exchange or the bill of lading through the seller's bank. Then it will be forwarded to the buyer's bank, and then the documents will be forwarded or presented back to the buyer. Basically, that is how a trade transaction is done. But let us also study all about the other modes of payment for import. As per the BSP Circular 874, Section 8, the modes of payment for imports are the following. Number 1, direct remittance. Number 2, open account. Number 3, documents against acceptance. Number 4, documents against payment. Number 5, letter of credit. And number 6, advance payment. What is the UCP 600? The Uniform Customs and Practice for Documentary Credits is a set of rules agreed by the International Chamber of Commerce which apply to finance institutions which issue letter of credit, financial instrument helping companies finance trade. Many banks and lenders are subject to this regulation, which aims to standardize international trade, reduce the risk of trading goods and services, and govern trade. UCP 600 also provides a set of contractual rules that establishes uniformity and universal acceptance by bankers, importers, exporters, and everyone involved in letter of credit transactions as a recognized means of settlement in international trade. So what is the letter of credit or LC? A letter of credit, also known as a documentary credit or banker's commercial credit or letter of undertaking, is a payment mechanism used in international trade to provide an economic guarantee from a creditworthy bank to an exporter of goods. Letters of credit are used extensively in the financing of international trade, where the reliability of contracting parties cannot be readily and easily determined. Its economic effect is to introduce a bank as an underwriter, where it assumes the counterparty risk of the buyer paying the seller for goods. It is also a document issued by a bank on behalf of a buyer authorizing payment by another bank to a supplier or seller when the conditions specified in the LC are satisfactorily met. A letter of credit is also an important payment method in international trade. It is particularly useful where the buyer and the seller may not know each other personally and are separated by distance, differing laws in each country, and different trading customs. It is a primary method in international trade to mitigate the risk a seller of goods takes when providing those goods to a buyer. It does this by ensuring that the seller is paid for presenting the documents which are specified in the contract for sale between the buyer and the seller. That is to say, a letter of credit is a payment method used to discharge the legal obligations for payment from the buyer to the seller by having a bank pay the seller directly. Thus, the seller relies on the credit risk of the bank rather than the buyer to receive payment. Upon presentation of the documents, the goods will traditionally be in the control of the issuing bank, which provides them security against the risk that the buyer, who had instructed the bank to pay the seller, will repay the bank for making such a payment. In the event that the buyer is unable to make payment on the purchase, the seller may make a demand for payment on the bank. The bank will examine the beneficiary's demand, and if it complies with the terms of the letter of credit, will honor the demand. Most letters of credit are governed by rules promulgated by the International Chamber of Commerce, known as the Uniform Customs and Practice for Documentary Credits. The current version, UCP 600, became effective July 1, 2007. Banks will typically require a collateral from the purchaser for issuing a letter of credit and will charge a fee, which is often a percentage of the amount covered by the letter of credit. Who are the parties to the letter of credit transaction? UCP 600 regulates common market practice within the letter of credit market. It defines a number of terms related to letter of credit, which categorize the various factors within any given transaction. These are crucial to understanding the role financial institutions play within. This includes: number 1, the applicant. The applicant is the person or company who has requested the letter of credit to be issued. This will normally be the buyer. The beneficiary is the person or company who will be paid under the letter of credit. This will normally be the seller. The issuing bank is the bank that issues the credit, usually following a request from an applicant. The nominated bank is a bank mentioned within the letter of credit at which the credit is available. The advising bank is the bank that will inform the beneficiary and their nominated bank of the credit send the original credit to the beneficiary or their nominated bank and provide the beneficiary or their nominated bank with any amendments to the letter of credit. Confirmation is an undertaking from a bank other than the issuing bank to pay the beneficiary for a complying presentation, allowing the beneficiary to further reduce payment risk, although confirmation is usually at an extra cost. Confirming bank is a bank other than the issuing bank that adds its confirmation to credit upon the issuing bank's authorization or request, thus providing more security to the beneficiary. A complying presentation is a set of documents that meet with the requirements of the letter of credit and all the rules relating to the letter of credit. LCs shall be negotiated in accordance with the terms and conditions set forth in the LC. Terms and conditions in the LCs shall be governed again by the UCP 600 on documentary credits. Letter of credits are also known as documentary credit. It is an instrument used by bank or the issuing or opening bank in favor of a foreign seller of beneficiary for a certain sum of money subject to the compliance of terms and conditions stipulated in the LC. What are the types of letter of credit? Number 1, according to form. Import or export, revocable or irrevocable, confirmed and unconfirmed, restricted or unrestricted, deferred or usance. Import and export. For commercial, the same credit can be termed as an import or export letter of credit depending on whose perspective is considered. For the importer, it is termed as import LC, and for the exporter of goods, an export LC. Revocable or irrevocable. Whether a LC is revocable or irrevocable determines whether the buyer and the issuing bank are able to manipulate the LC or make corrections without informing or gathering permissions from the seller. According to UCP 600, all LCs are irrevocable. Hence, in practice, the revocable type of LC is increasingly obsolete. Any changes or amendment or cancellation of the LC, except when expired, is done by the applicant or the buyer through the issuing bank. It must be authenticated and approved by the beneficiary or the seller. Confirmed or unconfirmed. An LC is said to be confirmed when a second bank adds its confirmation or guarantee to honor a complying presentation at the request or authorization of the issuing bank. Restricted or unrestricted. Either the one advising bank can purchase a bill of exchange from the seller in the case of a restricted LC. The confirmation bank is not specified, which means that the exporter can show the bill of exchange to any bank and receive a payment on an unrestricted LC. Deferred or usance. A credit that is not paid assigned immediately after presentation, but after an indicated period that is accepted by both buyer and seller. Typically, seller allows buyer to pay the required money after taking the related goods and selling them. Letter of credit according to term. At sight, a credit that the announcer bank immediately pays after inspecting the carriage document from the seller. Red clause. Before sending the products, seller can take the prepaid part of the money from the bank. The first part of the credit is to attract the attention of the accepting bank. The first time the credit is established by the assigner bank is to gain the attention of the offered bank. The terms and conditions were typically written in red ink. Thus, it is called red clause. Back-to-back. A pair of LCs in which one is to the benefit of a seller who is not able to provide the corresponding goods for an unspecified reason. In that event, a second credit is opened for another seller to provide the desired goods. Back-to-back is issued to facilitate intermediate trade. Intermediate companies such as trading houses are sometimes required to open LCs for a supplier and receive export LCs from the buyer. Standby letter of credit operates like a commercial letter of credit, except that typically it is retained as a standby instead of being the intended payment mechanism. In other words, this is an LC which is intended to provide a source of payment in the event of non-performance of contract. Letter of credit provisions must be opened on or before date of shipment. It is valid for 1 year. Only one LC should be opened for each import transaction, and the documentary requirements are duly accomplished LC application, firm offer or pro forma invoice, permit clearance from appropriate government agency, and duly accomplished IED basis of advance payment of duties. The letter of credit procedure. The seller sends firm offer or pro forma invoice to buyer specifying that terms of payment is by LC. The buyer submits to opening or issuing bank the duly accomplished LC application, IED, pro forma invoice, and when applicable, the import permit. Opening bank sends by telex the duly processed LC to seller's bank. Confirming bank advises seller the receipt of the LC opened in his favor and that goods may now be shipped out to the buyer. Seller sends good to the buyer in accordance with the terms and conditions set forth in the LC. Seller presents to his bank the original copies of the import or shipping documents. The confirming bank forwards the import shipping documents directly to the opening bank by courier and requests for payment. Opening bank endorses to buyer the documents upon settlement of financial obligations attendant to the LC transactions. Documents against payment. In international trade, an arrangement in which someone can only collect imported goods after paying for them at a bank and showing proof of having paid. At the request of the shipper, the negotiating bank will instruct the collecting bank to endorse and deliver the shipping documents to the buyer only after payment has been made. The seller retains control of the shipment until payment of relative document is made. Procedural steps of documents against payment. The seller submits to buyer pro forma invoice or quotation. If offer is acceptable, buyer executes purchase order and sales agreement with seller. Upon confirmation of foreign PO and sales agreement of the buyer, seller ships out goods. Seller presents to his bank original commercial invoice, BL or airway bill, packing list and other documents required by the buyer and instruct his bank to collect in his behalf the payment from buyer's bank. Seller's bank sends through courier original import shipping documents to buyer's bank. Buyer's bank advises importer upon receipt of the original documents and will release the same to the buyer only after payment has been made. Buyer pays his bank and obtains original import or shipping documents for customs clearing. Buyer's bank remits payment to seller's bank. Seller's bank endorses to seller the payment for goods sent by buyer's bank. Document against acceptance. An arrangement in which someone has the right to collect imported goods only after they have signed an agreement at a bank to pay for the goods and have shown proof of having signed it. Procedural steps for document against acceptance. Agreement is reached between buyer and seller. The seller ships out the goods to the buyer. The seller submits original invoice and shipping documents to his bank. The seller bank sends original shipping and import documents to the buyer's bank together with a time draft. The buyer's bank informs importer of the availability of the import and shipping documents together with a time draft. The buyer secures the import documents from his bank after duly signing the time draft. Upon settlement of payment on the scheduled date, after the BL or airway bill shipment date, the buyer's bank remits the payment to the seller's bank. The seller's bank remits the payment to the seller. Open account arrangement. An open account transaction is a sale where the goods are shipped and delivered before payment is due. Obviously, this option is the most advantageous for the importer in terms of cash flow and cost, but it is consequently the highest risk option for an exporter. Because of intense competition in export markets, foreign buyers often press exporters for open account terms, since the extension of credit by the seller to the buyer is more common abroad. Therefore, exporters who are reluctant to extend credit may lose a sale to their competitors. However, the exporter can offer competitive open account terms while substantially mitigating the risk of non-payment by using one or more of the appropriate trade finance techniques such as export credit insurance. The goods, together with all the necessary documents, are shipped directly to the importer, who has agreed to pay the exporter's invoice at a specified date, the exporter time, and that the importing country is commercially and politically secure. Open account terms may help with customers in competitive markets and can be used with one or more of the appropriate trade finance techniques that mitigate the risk of non-payment. Procedural steps for open account arrangement. Agreement is reached between the buyer and the seller. The seller sends goods to buyer and forward by courier original shipping or import documents directly to the importer. The buyer will effect payment to his local upon maturity and shall be payable at least 30 days after the BL or the airway bill shipment. Buyer's local bank transmits payment to the seller's bank. Seller's bank then remits payment to the seller. Direct remittance. It is a mode of payment wherein original documents are being sent by the seller directly to the importer, whether payment will be made on a future date or immediate or aside. Commercial banks may service applications for direct remittance of import payments effected through modes other than those under LD, DP, DA, or AO only upon presentation of the complete original shipping documents as well as copy of the CRF and or imports clearance for regulated items issued by concerned government agencies, if applicable. Procedural steps for direct remittance. Sales agreement consummated between the buyer and the seller. The seller forwards to buyer offer to sell or the pro forma invoice. The buyer confirms acceptance of the offer by issuing the purchase order or sales agreement and instruct the seller to send the goods. The seller ships out the goods to the buyer. The seller sends by courier copies of the original commercial invoice, packing list, BL, or airway bill. The buyer presents to his bank original import or shipping documents and pays for the imported goods with instruction to remit said payment to seller's bank. The buyer's bank remits payment to seller's bank, or the authorized agent banks may service within 29 calendar days after the bill of lading or airway bill shipment date applications for direct remittance of import payments upon presentation of the original documents. The seller's bank advises seller to collect payment sent by the buyer's bank. Advance payment. Advance payment is a type of payment made ahead of its normal schedule, such as paying for a good or service before you actually receive it. Advance payments are sometimes required by seller as protection against non-payment or to cover the seller's out-of-pocket cost for supplying the service or product. Advance payments are made before receiving a good or service. In many cases, advance payments protect the seller against non-payment in case the buyer doesn't come and pay at the time of delivery. Companies record advance payment as assets on their balance sheets. A prepaid cell phone is an example of an advance payment. What are the procedural steps for an advance payment? The importer and the seller enters into an agreement. The importer sends through his bank or the remitting bank payment for the goods. The importer bank remits payment to seller's bank. The seller's bank pays the seller, and then the seller ships out the goods or the shipping documents directly to the buyer. So here is the summary of what we have studied about the modes of payment as per Engineer Ruben C. Pedresa. Here we have the mode, the time of shipment, the transmittal of documents, and the time of payment. For DA and all the other modes of payment, the time of shipment are the same. It is upon acceptance by the buyer of seller's offer to sell, or when there has been already a contract that has happened between the buyer and the seller. In DA, the documents are sent through the seller's bank, who then transmits them to the buyer's bank together with time draft. The buyer then receives the documents after signing the time draft. The time of payment for DA would be coursed through buyer or seller's bank and made within 30 days after the BL date. In DP, the transmittal of documents is sent by the seller's bank to buyer's bank, who endorses them to the buyer. The time of payment is that the buyer pays for the goods upon claiming from his bank the import or the shipping documents. The buyer's bank remits payment to seller's bank. In DR and in OA, the documents are sent directly to the buyer, but the time of payment for DR is made upon presentation of documents at buyer's bank within 29 days after the BL date. For OA, the time of payment is coursed through buyer's bank within 30 days after the BL date. In LC, the transmittal of the documents is from the seller's bank to the buyer's bank. The time of payment, the seller is paid upon presentation of documents to his bank. In AP, transmittal of documents is sent directly by the seller to the buyer. The time of payment in AP is when the buyer pays seller prior to shipment of goods, payment course through the buyer's or the seller's bank. So those are your modes of payment for imports. I hope that you have learned a lot from this video. Thank you so much, guys. Good luck on your studies and stay safe.